Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about why I am buying Meta stock. And I'm not alone in this. There are some very smart people whose valuation opinion I truly believe. We're going to talk a little bit about their valuation and why it shows that Meta may be a great deal.
All right, let's get into it. Two Super Guys Trade Stocks. Bow bow.
All right. So this is designed to represent Meta just sitting on piles of cash and what they're actually going to do with it. All right. The reason why I'm making this video is there's a recent series that came out by Aswath Damodaran, who is a NYU Dean of Valuation. He's a college professor that teaches how to value businesses. And he did a 3-part series basically about Meta stock, why he was wrong initially, and why he's still buying more. So,
What's his name?
I'm sorry. Aswath Damodaran is his name. You'll see it on one of the slides here.
That sounds
Um,
awesome.
yeah,
What a
yeah,
cool
it's
name.
impressive. So absolutely brutal year for Meta shareholders like ourselves. All right. Not everyone kind of I think knows the story here a little bit, but the real question is why has it been so brutal? All right. It has been an absolute shitstorm for Meta stock this year. Right. You have just a confluence of all these factors coming at it in every different direction, and they're all legitimate issues to varying size and potential. Right. Do you see anything that strikes you out there?
I mean, TikTok is probably the biggest thing, but I feel like there's still a chance it can get banned. Like there's still like I feel like they always get close, and then they don't
Yeah,
do it. You know.
yeah. I mean, interesting, but I would never, kind of base my investing decision upon something like that that's outside the control.
Right.
Right? If that gets banned, great. Meta goes up, what 20% probably overnight. But I am not exactly gonna, count on that. Um, Meta was an absolute powerhouse for over a decade, just compounding machine. Just look at this revenue growth here from 2009, 777 million to 117 billion in 2021.
Yeah, that's disgusting. That's Apple status. That's pretty good.
I mean, this growth honestly was faster than Apple.
Yeah, it was. That's pretty wild.
Which is absolutely insane. And like I don't know, like their likelihood of going back to something like this is not very high at all. But they certainly have a core business which has great internal kind of growth abilities, right?
Yeah, absolutely.
And they were starting to use the cash that they were generating for appropriate purposes. At least as from a shareholder, one of my favorite things to do is buy back stock, right? If you look at, this is a chart from Macro Trends, looking at from peak kind of number of shares to where they are at the most recent quarter, they're down about 9% from peak. They could do much better than that. They have a long way to go, but they are buying back shares, particularly more effective when you're, kind of at a decreased valuation right now, right?
Yeah, I'm actually surprised that they took the time to buy even a little bit of shares back when they just had such a rough quarter financially. So that they got to really think that this is quite a low price for them. Otherwise, they would not take that risk.
Exactly. So this is the gentleman that actually, had this series. He's got a YouTube channel. It's got almost 500,000 subscribers. Big YouTube channel. It is quite literally. I mean, a little dry. I'm not gonna lie. He is a college professor, and his videos basically are college level finance videos. That's what they are. They're lectures, and
Ours too.
but it yeah, yeah, sure. Yeah, completely clueless assholes here on this channel. Okay, that's another alternative name we considered. But this is his background from his Wikipedia page, right? You're talking about he's known as the Dean of Valuation. He literally writes books on how to value a business. Right? Now, I know what you can say as a counterpoint to that, right? If you can't do, teach, right? You've heard that line before.
Yeah, I'm kind of wondering where this is going to go here because he is
Okay.
teaching.
Yeah. So that's the counterpoint, basically. I'm saying is like, yeah, maybe he's written the book on it, but he's actually not like someone who's particularly skilled at it. All right, that's certainly something you have to pay attention to and consider. I'm not skilled at anything, so I don't know what the hell you're talking about here. But this is his channel. This is a 3-part series here. Now, I'm going to give you a little summary as far as like what these videos entail.
Thank God.
Like as you can see, each one of them 40 something minutes, right?
Yeah, I don't
Like
have that
these
much
are
time.
not short. videos. Yeah. Thank God for the 2x speed on YouTube. It's my favorite utility. But if you kind of look at the titles here, so corporate governance, he's talking about the fact that Mark Zuckerberg controls a disproportionate amount of voting rights, right? He only owns 13% of stock, but he owns 53% of the voting rights. That's a major problem in tech, the way they structure these deals. I mean, if you've seen the Social Network movie, you remember how he kind of got his partner out there in the beginning. That's kind of the same thought process. Is that this is really Mark's company?
I I'm okay with that. I would prefer that, to be honest. Yeah, I know that's gonna be you're gonna disagree, but I prefer it.
Yeah, I would never say I prefer that, but you have to realize that you're basically turning over, a certain amount of control in your assets to Mark, and he can kind of do whatever he wants to. He has shown signs recently where he's paying attention to what shareholders think, right? With the massive layoffs that they just underwent a swath of, they are
Yep.
trying to kind of rein in expenses, all right? Um, but the other kind of main point here he has in this first video is talking about the business cycle, right? How you kind of go through like early development phase, and then this like early kind of hyper growth phase, and then you eventually achieve like a stable business, and then eventually you have to go into decline, right? And start selling off assets. And how when you're talking about kind of more traditional companies, this took 100 years to take place, right? To go through that whole cycle. So naturally, people die or retire in terms of management, and they get replaced with people that are probably more suited to the company at that point in time. Whereas now you have these hyper growth companies. And you've seen Mark, who was the founder, right, of Facebook, and he's still running the company today. Is he the right man for this kind of mature, stable company, or is he the right man for the visionary, which no longer is the guy you want running the helm? That's a question.
I'm gonna say the answer to that is yes, based off of I really, really liked what he said on his Joe Rogan podcast. I respected
Okay.
the hell out of it, and he is correct. Just because he innovated, some crazy stuff once and grew it doesn't mean that he can't do it again. And to what I see could be a next logical evolutionary step in social networking. Seems like that's where
I,
it's headed.
I get that. I get that. Um, the lesson two here, he talked about accounting its consistencies, and how major point of this one was how R&D is always expensed in the current year rather than being amortized over the actual like lifespan of that research and development. Because right now you're looking at this massive R&D spending on Meta's part, and it's
Massive.
just hitting the current year, kind of income statement. But in reality, they're building technology that is likely to be useful for
I
many, many years.
declare
This is him.
bankruptcy!
Sorry.
Just a little bit. The kind of interesting point here I have as far as this goes, it's all in like I guess it ties into number three here, all in the story, and the story here is not being told well by management, right? Like, do you even understand how they plan to make money in this metaverse if that play works out?
Well, so I mean, there's multiple fingers or facets on how they're doing it. There's a hardware, there's software. They've also already taken the necessary steps to put themselves in I guess the helm of VR. Like 80% of all
Hmm.
VR is Facebook, and no one
Yep.
realizes that. I don't know why, but they're taking necessary steps to get to where they need to be.
Yeah, okay, I get that, but my point here is that management hasn't really given us a concrete idea of how they plan to monetize this asset. I just tell you, oh, it's going to be the wave of the future. It's immersive, and I think that's part of the way it's gotten lost in the story here a little bit, is that they haven't really given us a concrete plan about like, are they going to do an Apple kind of app store? Is that their business model? Where they're going to collect 30% of all sales of games that are sold on
I
the
hope
platform?
not.
You know, I don't know, but like that's the real question. Are they looking more towards the traditional kind of Instagram meta model where they're going to be monetizing user data and selling ads that are more immersive? I mean, how immersive would an ad be in the metaverse? It's an
Right,
interesting
it
thought.
would be pretty crazy. Yeah.
But they haven't even answered those questions because, frankly, I'm not sure if they really know. That's part of the reason why the valuation is getting tanked here.
That's
All right.
fair. I mean, they're also spending way too much, way more money than you would want. However, I do have a quick solution for that. I guarantee you, if Mark Zuckerberg started an OnlyFans and just put that money to R&D, he could have a bunch of money.
Yeah,
Come
I
on.
could see that. Hopefully he wears that zinc oxide stuff that he does when he goes surfing too.
100% full
Yeah,
body.
I
Yeah.
mean, I would pay for that. But do you remember this little foray? Actually, speaking of like vintage Facebook kind of business enterprises that went nowhere.
I have never seen this in my
Yeah,
life.
they designed their own phone at one point in time. It went nowhere.
Ouch. Yeah, have not seen this.
But this has been a problem that they've kind of seen the writing on the wall a little bit. This I forget exactly the year. This was like 2006. It's been a long time since they had this kind of in development, and that question was, whether or not they could own the device, right? Because the early days they kind of saw what Apple was going to do with owning the actual underlying technology.
Right.
It's been a while, but and then you remember this one's much more recent. Facebook Portal, yeah, another one that went nowhere really.
Yeah, I think it's just because Amazon's was probably half the price.
Well, you can buy this now for $70.
Yeah, that's expensive. I think
You think that's expensive for something like
I'm
this?
pretty
Okay.
sure I got mine for 35 on Amazon.
Yeah. Okay.
Like Amazon's version.
So back to like the whole kind of Aswath Damodaran model here. Basically, this is a chart where he looked at if you were to amortize R&D spending and see what the actual kind of operating income of the company would be. And if you look at it here, kind of on this bottom segment here, you're looking at this operating income being adjusted significantly from what you're looking at in terms of pre kind of the R&D expense in the individual year. All right. The other kind of factor here is looking at that operating margin. You start talking about a 40% operating margin, which is insane in terms of how profitable their underlying kind of business model structure is. And
Yeah,
you
I
know,
mean, it looks
we've seen a
great.
significant hit this year, right? It looks like if you actually didn't do this adjustment, it's like a 20% operating margin. Whereas he's arguing if the R&D is amortized, then it's more like a 40%, which is in line with their historical kind of average.
Right. Okay. I mean, that makes it feel a
Yep.
little bit better.
Yeah. And then he even took a step further here and looked at the current valuation and did a with and without Reality Labs and kind of what they were valuing Metastock at, right? So if market cap as of today is 295 billion. So even, kind of in the between zone here where, he bought some right down at 1029, it's about $100 a share, hit a low of 247 billion dollars in market cap, and it bounced back up to this 330. It's come back down now again to like 295. I'm sorry, 311, back down to 295. So it's headed back down, drifting down a little bit. However, the really fascinating thing here is if you look at these numbers right here, this market cap without Reality Labs, they are basically pricing at the peak here, this 247, when it got to the absolute lowest. That is if the $100 billion that Meta's going to invest in Reality Labs over the next 10 years, that was going to go into a dumpster fire. That 82% of that was going to have no return for the company at all.
Okay.
Yeah, that's pretty startling to think that cutting edge research in a immersive technology is going to have no fruits for the company whatsoever.
Right, but it stayed at 330.
So in terms of that's what he's saying. The market cap
Oh,
would be
yeah,
without Reality Labs.
got
Right?
it.
The other kind of fascinating thing here is, and this is like a bad scenario. So when this whole model right here is built upon no revenue growth for 20 years, that operating margins decline over time, and that the company exists for 20 years and goes away into obscurity, it disappears entirely after 20 years, that they don't exist anymore.
Okay. Yeah. Yeah.
So the real point that I'm trying to drive here, and this is kind of what his point in his last video was, is that they are literally priced to basically be a complete pariah and die.
Yeah.
That's literally the pricing
If
model.
there's literally any upside to Reality Labs, because their price is if that all that money was just lit on fire,
Yeah,
and nothing becomes of it. So, I mean,
exactly.
I just don't understand how they're at this price. That's unreal. Well,
Yeah.
macroeconomic stuff too.
Yeah. There's definitely situations here, but this is actually his prior kind of modeling as far as valuation. This is before this kind of recent sell-off, and he had them trading at this. They were all the way back to 220 at this point, so that's 100% upside from today. But
Right.
he was valuing it at about 346 a share.
346 a share is their value.
Yeah, that was his value of Meta based upon his prior analysis.
Oh my! I mean, that makes me feel fantastic. Although I will say, I would like to know what his value of Intel is,
Oh,
just
that's a good point.
to see where he's at in this realm of logic or fantasy.
Yeah. All right.
Just put it out there.
Yeah.
Interesting.
Well, that's my plan. I mean, as of right now, I own 64 shares of Meta. I have about 3,000 in cash sitting in that account that I'm waiting for a little bit of a market drop. I am timing the market because I'm a complete idiot. But we're gonna do a separate video about kind of technical analysis for the market as a whole. But I'm looking to deploy that as soon as I can on Meta stock as well.
Yeah, I'm timing the market super hard. Just look at the comments. People are calling me very dumb. All right, guys. Have a good one.
See ya.